Okay, good morning, everybody. It's Monday, September 13th, 2021, and we're going to get started with our pre-market analysis on the S&P 500 futures market. Something I just want to point out, just showing how well our levels have been working here. On Friday, we came down and we bounced directly off our eye level here at 76.50. Got a pretty good reaction off of it, broke down. And notice the low of the day from Friday was right down off of 56 here. I believe we bounced at 56.50. We had 56 quarter on our charts. Going into Sunday here, so yesterday afternoon, look at where the market found resistance. Right off 76.50, the area where we bounced last week. And then when we sold off, look at where we found support, right off 63 quarter, another eye level that we've had on the charts here for looks like a month. And then after we broke through that level, eventually we did bounce, but no strong follow through. Then continued to sell off in the overnight session here. And look where we bounced off 56 quarter. I believe the low there was 56 even. So we broke one tick below this eye level that we've had on the chart for over a month. We put this on here back on September 13th, so exactly a month ago. Bounced off of it almost to the tick, off by one tick there, and now you can see we're now advancing up. Notice that we pushed up here, pulled back, and bounced right off 76.50 once again. Found that as support, and now we're starting to push higher here. So just amazing stuff. You know, I got to the computer this morning, looked back at all this, and was just blown away at how amazing the market has reacted off of these levels. So with that being said, let's go ahead and jump into our ultra high time frames here. Take a look at what's happening. Our quarterly and our monthly are pretty much look very strong, no signs of exhaustion. You can notice how we have these kind of extended kind of periods where you have 4 or 5 bars of green price action, and then just a little hiccup, a little bit of a pullback, and then a continuation. Potentially that could be what we're seeing here. We have a 1, 2, 3, 4, 5, 6, essentially 7 candles, although you could argue that you had one red candle here. So you had 1, 2, 3, pullback, 1, 2, 3. Potential that that could also be a pullback there. But we do have pretty much no indications of exhaustion from an RVI perspective on these two ultra high time frames. And then when we get down to the weekly here, let's just quickly rehash about what we talked about last week, is the potential for there to be some type of bullish divergence off this weekly candle low that we had to wait until Friday afternoon to see it close. And I specifically told everybody there's potential for the market to continue to push down all the way to the low of this candle where we're creating the divergence from, and that low is 43.47. So still pretty much another 100 points lower compared to the low that we made last week. And you can see now on the RVI, we're now on this new candle, which has 5 days to develop, so we don't really want to say too much right now. We're pointing down, so potentially this could continue to develop, and that's why I said we could potentially continue to push lower on RVI and then eventually find some type of support and bounce, and we'd still have what looks like a bullish divergence. So we'll have to watch this week and just see what ends up happening. But right now, even off of the all-time high, we didn't really get a clear bearish divergence on the weekly. We will, as we jump down here, see a pretty obvious case on the shorter time frames, but on the weekly, we didn't really get much. Again, looking at candles alone, you can see you get these little 1, 2, 3 pullback. This one got a really quick pullback there, but you get these 2 or 3 candles in a row. Sometimes a pretty strong push of 5 candles and then a pullback. Right now, we do have kind of a 2 candle pullback there. Just some things I'm pointing out, not necessarily anything that I typically trade off of or anything in my strategy, but you can see these obvious patterns of these pushes and then these shallow pullbacks to continuations higher here. And this market going all the way back, I don't know, 10 years here, just continually does the same thing. So let's look at our daily. This is where we get a very clear picture of the bearish case off the all-time high. And like I kind of emphasize here in our community, if we get a bearish pattern on the daily, it can lead to 100, 200, 300 point pullbacks. And so back on September 3rd, we talked about this candle, probably not on the morning of the 3rd, but the morning of the 6th, going into that new week there. We talked about having that bearish divergence on the, I guess that would have been a candle for Friday. And then we said we saw it here. If we jump down to our 4-hour, we also saw it on the 4-hour as well. So we had a daily and a 4-hour bearish indication back on the 3rd. And as you can see here, with each subsequent candle coming into this morning, we've basically sold off from that high up about 45.49 all the way down to 44, almost 49 there. So almost a 100 point pullback there. Now today's candle, again, can't say too much about it, but that candle that closed on Friday looked pretty bearish, especially with such a huge wick on the upside there. Almost 50% of the entire candle was a wick on the upside, so not very bullish looking there. But the idea with these type of candles, if we break above that high of that previous daily candle, that will essentially negate any type of bearishness that we're seeing there. So you can see the candle before that, the day before, also very bearish with about a 50% of the candle with a wick to the upside there, continued to carry through coming into that next day. So we'll see what happens this morning. We don't have any type of bullish divergence off the current lows in price right now. So, we'll just have to see what happens. I think what you could argue is if we come all the way back to where we got our last bullish divergence, you could argue that we pushed higher in price off that previous daily low, but we do have a lower RVI. So let's go over to where this candle closed on RVI, which was right about there. And there is, I guess, somewhat of an argument, I guess, that you could put right there. But on the current candle, if this continues to carry through, this will end up being a false signal because we don't have a defined peak. So just remember that unless we have two subsequent candles forming something, we want to see an actual defined peak on RVI to compare with price. And so this might end up not really following through. What could happen this morning is this signal that is down here at around 51 on the RVI, it could end up closing higher or flat. So, I mean, it could close up here, and then we actually would have that defined peak down there, which would be somewhat of a bullish case here on the daily. So I do think that there's a good case that could be made for that bullish indication, especially if we do get some type of push this morning. This new candle has an RVI that closes higher than it did on Friday. We will have that little apex there on the RVI. So just keep that in mind this morning. Breaking that low of the previous daily price is probably going to negate any of the stuff that we're talking about right here. So we'll just have to watch and see. When we get to our 4-hour, again, we had the bearish indication up on September 3rd. We've now pulled back about 100 points from there and getting a little bit of support. Now, we talked about the larger retracement scheme here on the 4-hour chart. So we had the 38 retracement. We had the 50%, which lined up with the previous resistance in the market back here, where we had this very strong sell-off. And then we had the 61, which I argued might be a little bit too high. We might want to compare it to the actual highs that were made in price, just a little bit lower, down around 44.15, 44.14. So they did pull back and bounce just in front of the 50%. So we did not call this level. I don't think there was enough lining up here to give me any type of indication of a stronger bounce from where they did bounce here in the overnight session. I did expect a little bit lower into 49 or maybe 48. So we'll just have to see. But on the 4-hour here, we do have a bullish divergence off of the overnight low. So currently right now, a little bit of an argument that the previous daily low has a bullish divergence, and now the 4-hour low over here, pretty much the previous daily low and our overnight lows here, which we'll get into a little bit more resolution as we get to the shorter time frames, and you're going to see what happened down here at 56.50. But got the bullish divergence from the previous daily low, and then when we came back down and retested that low last night, we got a bullish divergence on the 4-hour. So some bullish indications down at the bottom there, but we do have a bearish signal. Or is this a signal or it's an indication? It hasn't closed yet. This will close about 30 minutes after the open. We do have what looks to be somewhat of a bearish case right now. And then if we just kind of look back to previous price action, pretty strong bounce there right around 87.25, which happens to be 50% of the previous daily price action. Pretty good bounce there in the overnight session from last week. Now we're pushing right into that level with a bearish divergence. So we'll have to kind of see what it says on the shorter time frames here. And if we do have every time frame from the 4-hour down giving us a bearish signal right in this area where we got some pretty strong bounces earlier, might indicate some type of pullback or continued correction lower here. But right now, a clear bullish divergence that has closed, so a bullish signal off the overnight low, and the potential of a bearish indication off of the overnight high. Let's go down to our 60-minute, and now we can actually see what happened down here off of the lows. And you can see that we got a nice bullish divergence off of the previous daily low, and then off the overnight low when we came down to test that level, and we pushed down 1 or 2 ticks lower and then bounced. So had you been here around midnight Pacific last night, when the market did come right back to this eye level, in fact, we talked about it at the beginning of our session here, we had an eye level sitting right there at 56.25. So had you been here, pulled back right into that eye level, and you saw all these potential bullish indications at that time, on the hourly, on the 30-minute, on the 4-hour, you could have had a pretty decent bullish bias going into the overnight session coming into this morning. Now I drew a fib retracement for the whole push down here. So we have the all-time high, I believe, was 49.50. We pushed down to 56 in the overnight session here. So that whole push down, we have the 38 retracement, which is, interestingly enough, right where we are right now, and right where the market essentially bounced last week there. And then the 50% is lining up with that previous support that we got all the way back at the end of August there, around 45.01, 4500 there. So that's a pretty nice confluence with the 50%. And then the 61.8 would bring us right back into these previous lows, right around August 31st and September 2nd there. So 60-minute, as far as the current market price goes, does also have a little bit of an argument for a bearish divergence right now. We do have to wait for this candle to close. So the 1 hour and our 4 hour over here, we will have to wait until 7 a.m. That's when both of these candles will close, and we could potentially have a bearish divergence on both of those time frames. So we will have some conflicting information here. Both time frames give a really clear bullish divergence off of the lows, and we are starting to get a little bit of a picture of a bearish signal off the highs. So we'll have to watch that. So let's jump down to our intermediate time frames and take a look at that. See if we're getting agreement with what we're seeing on the higher time frames here. And let's go to our 30-minute here. So 30-minute also did have on both tests here of 56.25, which again, real quick, if we go back to our eye level on the chart, 56.25, it's been on there for a month now. So we got a bullish divergence on both tests of that low on the 30-minute. So agreement with what we're seeing on essentially the daily, the 4-hour, and the hourly. And then we are seeing right now, well, we're not really seeing any type of bearish divergence on the 30-minute. And it looks like right as I talk, we're continuing to push here. So we're not getting an agreement on the bearish end of things when we look at the intermediate time frame here and the daily, I guess, but there's really not enough resolution on the daily there. But we are breaking right through all of that previous support right now. So it could be that we have a little bit more of a bullish case off the overnight low than we do a bearish case here. Now, the 10-minute right now is showing some bearishness, but they are continuing to push higher. So the bearish signal was off the 620 candle, and this candle that will close right at the open still has time to develop here, another 5 minutes. But I think just to kind of wrap everything up, put it all together here, we'll jump all the way back up. Again, the ultra high time frames all look pretty strong. They didn't really have any signs of exhaustion from a divergence perspective. Our daily has what looks to be a potential for a bullish divergence off the low, but we'll have to see how today's candle and maybe even tomorrow's candle looks and the signals look here on RVI. And then we get to our 4-hour, and this is where we have kind of two things going on here. We got to wait till 7 a.m. for this candle to close, but we do have a close signal down off the lows. Same thing on the hourly here. So we're kind of in a situation where I do think that there's a little bit more of an argument for a bullish case this morning off the previous daily low and off the overnight low. But we are starting to get signals on most of the time frames, not all of them, but most of the time frames of the potential for a bearish divergence off the current highs. So what that could mean is we get some type of pullback, maybe a retracement of the current leg, the push up from the overnight low, and then we get a bounce to come up and retest some of the levels that we have above us. I wish I had, if we didn't have almost every single time frame showing a bearish case right now off the current high, then I would have a lot more confidence in saying that we could expect just a complete bullish push coming into the open. But because we do have a lot of counter indications here off of the current high, we need to heed that signal and keep it in mind here, especially that we're right at the 38% retracement. So if they can get through that coming into the open here, then I think it's a pretty clear case that even if there's a pullback, we can find a long to look for a continuation up into some of the other levels here. Now it is pretty choppy, this region up here, so as we push up into above 4490 here, going into 4500, there's a lot of support and resistance, a lot of chop, but we do have some great levels to rely on, and of course our signals, which are just impeccable here. So we'll just have to see what happens up top and dial down to our short time frames here, look for some clear signals.